Today's guest on Zenvesting podcast is Mohnish Pabrai. Mohnish is the managing partner of the Pabrai Investment Funds. He's well known for his Buffett-like style in investing, and he's a quote-unquote shameless cloner. So today I'm hoping to talk to Mohnish about his investment philosophy, his background, and his wonderful philanthropic endeavors, the Dakshana Foundation. So, welcome, Mohnish.
Thank you, Lauren. It's a pleasure and honor to be with you. I have a lot of respect for you as an investor, and I think as one of the very few women investors, and that's wonderful to see.
Well, now there are a few of us. You have a daughter in the investment industry. Is that correct?
Yeah, but still very underrepresented. And I think actually women, I think temperamentally make better investors.
There is some evidence to suggest that returns from women are actually higher due to the low turnover in portfolios managed by women, which is often attributed to a lack of confidence or overconfidence bias on the male side, which is very interesting. But since you brought up women and investing, tell me how you got your daughter interested in investing.
You know, I have two kids, two daughters.
Mhm.
I never ever tried to influence either of them to go into investing or become investors or even spend much time talking about investing and such. What I always encouraged them to do, and what was my focus, wife's focus when they were growing up, is that we wanted them to hone in and focus on what they thought was their natural calling. And I thought my job as a parent was to help in the discovery of that calling. I just assumed that it's not going to be investing. And then the younger one doesn't have much interest in investing and such. Monsoon actually surprised me when she expressed an interest and then she went to work for a Asia hedge fund. And then actually when I started to look at how she approached things, I actually found that her approach was actually superior to mine. And
Really?
yeah,
How is that?
well, I mean, I think there are inborn traits
Mhm.
and then there are what I would call learned traits. I think in investing, if you try to go against what is your natural greed, natural temperament, that's an uphill battle. You know, who we are as what our traits are and all of that, that is hard coded at the age of 5 or 6. So between our genetics, what happened the first 5 or 6 years of our life, we are at age of 6 and the age of 96 is not going to change. So basically, if you're a hyperactive person who needs a lot of action, generally speaking, you're not going to do really well in value investing.
Mhm.
I think Monsoon has what I noticed is she has traits that are much stronger in her than they are in me. One trait is she hates to sell anything. She absolutely hates to trade, which is a great trait. The second trait is she's very biased towards very high quality. So she wants to find and buy these extremely high quality businesses and then never touch them. And what could be simpler?
Well, those those are really great personality traits. It reminds me of a quote from one of your favorite books, 100 to 1 in the Stock Market by Thomas Phelps. And he has a great quote. I can't recall it right off the top of my head, but it's about the tendency for investors to sell investments too soon and that you should leave them in the portfolio
I think
longer.
that quote is something like every sell decision is an investing mistake.
Hmm.
Basically his I guess where he's coming from, he's saying, look, if you bought it right, it would never need to be sold.
Mhm. Scott and I have gone back and looked at all of our buy and sell decisions over the course of our history, and I would say the most common error we make is in selling securities. So I do think there's a lot of validity there. And it's just really exciting that your daughter has gone into the investment business. She was at Dalton, I believe, and now has launched her own fund, Drew Investment Fund. And I wish her a lot of success. It gives me great joy to see the two of you together at different investment conferences. As you know, or you may know, that my dad really influenced me, and we're terrific friends. So it's wonderful to see that relationship in another father-daughter team, so to say. If you
Yeah,
don't
and yeah, and actually this is a dimension to our relationship that I never expected, right? I mean,
Mhm,
because not part of the game plan. Like I think that Monsoon and I have been in different, we visited a lot of companies together. I used to just take her along, like, one time I was going to China to speak at Peking University, I think 2017 or something.
mhm.
And I asked her if she wants to come. I was thinking of it more in terms like a China trip for her. And Guy was coming there too.
Guy
And
Spear.
then the folks at Peking University, they arranged a translator and a guy who knew Mao Tai really well. And at that time, I had an investment in Mao Tai. So we flew to middle of nowhere in China from Beijing, and he spent a day at Mao Tai. And the thing is that I had bought Mao Tai many years before that. Monsoon went and bought Mao Tai after the trip, and I thought it was really expensive at that point, and such. But she bought it, and then later, just a short, maybe a year or so later after that trip, Lilu called me and said, "Look, I know when we bought Mao Tai, we were going to hold it forever, but there's stuff going on. It needs to be sold." So he said, "I just want to let you know that I'm going to be selling, and I've already been selling and so on." So I said, "Well, if God is selling, then who am I?"
Right. Lilu calls you and tells you to sell. You might wanna think about
So
it.
one femtosecond after that call, I placed my Mautai sell orders. None of this data meant anything to Mons. I talked to her about it. It just bounced off. And till today, she has not sold Mautai. And as it turned out, I think Zilu and I sold at like 7 or 800, 900 RMB per share. It's over 2000 per share now. Okay. So whatever was bothering him didn't seem to affect the core franchise the way he thought it might have affected it. Monsoon, I think when she went to that trip and she saw the place, I mean, it was extremely clear on that trip that this was a very, very special business. This was a business where the cost of goods sold was less than $2 and the selling price was like $1,200. That's incredible business.
Unreal.
And she she understood that. She didn't care what I was saying, and she didn't care what Lilu was saying, and she still owns it.
Wow, so she had the conviction to stand pat.
Very
Uh
strong conviction. Yeah, it was really surprising for me to see that. Was really surprising.
Now, Monish, my guests may not know that in 2007, you purchased a lunch with Warren Buffett for about $650,000. You were the top bidder, and I believe you took your girls with you on that lunch. So how old would the girls have been at that time?
They were 10 and 12 years old at the time. And I actually think it was the absolutely perfect age. It just happened that they were at that age. I had been trying to win that auction for a few years and I kept failing. And then we finally prevailed in 2007. And basically, I think that so when we had that lunch, they sat on either side of Warren, and he was having a lot of like side conversations with the two of them. Like I think he pulled out a Johnny Rockets card from his wallet, and he shows it to both of them and says, "Look, I this the holder of this card is entitled to lifetime free burgers at Johnny Rocket for him and his friends." I mean, he must have made some offer to buy the business. It didn't work, and maybe they gave him that card as a consolation prize. I'm not sure what the history was. But then he says that there's a Johnny Rockets in Irvine. When I come to Irvine, we're going to go to Johnny Rockets and we're going to order one of everything from that, because it's all free. You know,
Oh my goodness. I
so
mean,
anyway, I mean, I think the thing is like one of the things he said to them at the lunch was he said that the most important decision you will make in lives is who you decide to marry. And they were not of marriageable age at that time. They were
right.
6 years old. They still remember that really clearly.
Oh,
And
no.
that sentence had a much greater impact on them than 1 million other sentences their mom and I have said to them.
Well,
So
that's a
we
lot of
just have
pressure.
I think they have dwelled on that sentence quite a bit over the
Mhm.
years. And I think they're very smart about their dating choices.
Well, that's very good. I will advise the same of my girls. That's really good advice. Are you
Yeah, and
jo
actually, yeah, it's I think like I said, just if I ignore everything else about the lunch, that alone is worth many times what.
Absolutely. What other valuable advice did you take away from the lunch?
Well, Warren, one of the things, this year, for example, was the last year the lunch was auctioned. And this year it went for the lowly price of like 19 or something. One of Warren's big focuses at these lunches is that he wants to make sure that the winners or the buyers of these lunches feel that they got a bargain. So he tries really hard to try to add as much value as he. I mean, I'll give you another example. I'll be very direct. Someone invited me to a lunch they had won with Eric Schmidt, the used to be the CEO of Google.
Right.
We met Eric in on the Google campus. We went to the cafeteria and
Mhm.
then went to like a private conference room. I mean, there's no comparison between the two. He's a very good guy, but this ethos of wanting to have the winner think he got a bargain was not part of the equation in his mind. I don't think it'd be part of the equation in most people, offer these charity lunches. But so one of the things Warren said to us when we started, he said, "Look, I have nothing going on all afternoon. I'm here with you guys for as long as you want." And he says, "When you're completely bored of me and you want me to leave, just let me know and I'll leave." Okay. So he didn't set a time frame for the lunch. After about 2 hours and 45 minutes, we said, I think we're done here. We were the ones who ended the meeting, not him. The lunch covered, I think later I made some notes, I think 54 different questions and a very wide ranging set of topics. Yeah, tremendous value addition. Like, I mean, I think like one of the things he would take anything I mentioned or anything any of the people asking questions mentioned, and he would try to answer it in a way that would add tremendous value. So I would ask these, very kind of basic questions. I said, "Look, I don't know what happened to Rick Goran. He was with you guys in the 70s. We knew the three of you did a bunch of deals together in the 60s and 70s, but he kind of fell off the face of the earth after that." So I asked him, "What happened to Rick? Are you in touch with him?" He says, "Oh yeah, I'm in touch with Rick. I play bridge with him all the time. I just got to, I get holiday cards from him, all of that, right?"
Yeah.
And then he proceeds to talk about the 73, 74 period. Rick got margin calls. It was a big drop in the stock market at that time, I think biggest drops.
Mhm.
And Rick was forced to sell his Berkshire Hathaway shares to Warren at the time for $40 a share, which is where they were changing hands at that time, which is now over 400,000.
I mean,
And
goodness.
he said, "Look, if you're even a slightly above average investor and you spend less than you earn and you use no leverage, you cannot help but get very wealthy in a lifetime."
It's
Okay.
true.
I mean, just think about that, that how simple is that, right? You take out leverage from the equation, you be patient, and you just, go at it one day at a time, and compounding works.
It does. The magic ingredient is time. I always tell investors we have some control over the rate of return, not as much as we'd like, but that magic ingredient really is time. And if you remove leverage from the equation, you're taking away something that could potentially take you out of the game, which is not helpful when you're trying to compound. But compounding is truly magical. Now, I know that what came out of that lunch, you have a special friendship with Charlie Munger, correct?
Well, I think the lunch was like buy one and get infinite. you know, when I was bidding for the lunch, and I talked to my wife, and you know, she said, "Well, this is like kind of bit ridiculous,"
Uh,
and but says, "You want to do it, go for it, right?" And later she said, "Other than marrying me, it was the best thing you ever did." you know, like the smartest thing you ever did. So anyway, the thing is that yeah, Warren was joking at the lunch. I mean, I think what happened is I mentioned to Warren that my ex-wife now, but my wife at the time, Harina, she was obviously a fan of his, but her true love in life was Charlie. And Warren got really competitive, and he said that, well, Charlie's this really old, boring guy. Between the two of us, I'm far more interesting, and you would not really enjoy hanging out with Charlie. And he said, just to prove that, I'm going to set up both of you guys to meet Charlie for lunch, and then you're going to know who's the more interesting guy. So I thought he's just kind of joking about it, right? And then a couple of days later, I get a copied on an email from Warren's assistant to Charlie's assistant, basically saying, "Hey, I met this couple and they were wonderful, and I really enjoyed meeting them, and I think you'll enjoy meeting them. And they seem to have the misunderstanding that you're more interesting than me. That is also going to get cleared up when you meet them. Please set up to meet them for lunch." Okay.
Mhm.
So then we met Charlie for lunch. And the funny thing is, I found the Munger lunch way more interesting than the Buffett. You
Really?
know, I think the thing is that Warren still has a veneer of diplomacy
Sure.
meeting anyone. I think he just assumes if he meets anyone, everything's in the public domain. It's going to
Yes.
be. And Charlie actually really doesn't have those filters. So it's like what you see is what you. So I found the conversation much more, you know, kind of without boundaries with Charlie, and it was just wonderful. So and then we hit it off, and then I started to meet him every few months for dinner, usually at his place. After that, I think I used to meet him for bridge, lunch and bridge on Fridays at the LA Country Club. And basically, I was a substitute. So when one of the old people couldn't get out of bed, they'd call me. So I told them, listen, you call me Thursday night or Friday morning, and I'll just drive over. I don't need advance. So those bridge and lunch afternoons used to go from like to about 5 or 6 p.m. And the funny thing is, Rick Goran was one of the bridge partners. And so Rick would show up. And so now I got all my questions about Rick answered directly by him.
Wow.
So yeah, it was really surreal because I'd be sitting there at the LA Country Club, and sitting across from me would be Charlie and Rick. I'd like have to pinch myself, you know.
I agree. I would have to pinch myself. I definitely think you got your money's worth out of that lunch with friendships that have been with you for many years and lots of contacts. I'm sure you've learned a lot from all of that. I was hoping you could share a bit with the audience about your childhood. You grew up in India, correct?
Yeah, I grew up in India. That's right, in Mumbai and Delhi.
And what year did you leave India?
Yeah, so I left India when I was 16. I spent about 2 years in Dubai. Finished high school in Dubai. Then after that, actually, I tried to go back to India for college, but there were strikes and such in the college I joined, and so my dad was very keen that we should go to the US for our education. So came back to Dubai and then applied to US university. So basically lost a year. But then I came to South Carolina after that for my undergrad.
Yes, that's always I will always remember that about you, that you went to Clemson in South Carolina. I don't know why.
Just like you, I'm from the deep South.
I know. Oh, so funny. I have been to Clemson once to watch a football game. It was a big deal. But tell me a bit about your parents in India. What were they like?
So both my parents have passed away. Obviously we all look up to our parents as role models. All think that we had most of us think we had the greatest parents. I think in my case, I was especially blessed. There were couple of things that happened. I would say it wasn't designed that way, but it happened by accident. So my dad was this entrepreneur who was really, really good at identifying offering gaps in the market and creating businesses that went after those
Mhm.
niches. And he was extremely good at starting from zero. Like all the businesses he started, they were usually after a bankruptcy. He had no money, and he would magically get things going with nothing. And but he was also an eternal optimist. And so the common theme in all these businesses was that he would usually be right about the opportunity. Some of these businesses scaled to a few hundred employees, but he would always try to grow as fast as possible. They were always very highly levered with almost no equity. And then when the first headwinds showed up, it would crumble like a house of cards.
Mm.
And what was amazing about both my parents is that they were one of their vices were they were very poor savers. So pretty much they spent whatever they earned. And so when the bad times came, there was no money for rent or groceries or anything. They would literally hit bottom. Business going away meant that we directly, personally had a lot of financial issues. After the age of, I think, 11 or 12, my dad started treating my brother and me as his kind of de facto board of directors. And especially when the business was in trouble, we'd sit down at night and we'd have to figure out how to make it last for one more day. And
Wow.
then we'd make it last for one more day. And then the next night try to figure out how to make it last for one more day again. Right. And when I was 15 or 16, I started going on sales calls with him. So I felt like I had several MBA before I was 19. And I never realized actually that there's a couple of quirks in the way how the human brain develops.
Mhm.
It's the most underdeveloped organ when we are born because the birth canal is too narrow. So the brain is actually the fastest growing organ in the first 5 or 6 years of life.
Mhm.
And then from the age of about 10 or 11 till about 20, there is a culling of neuron connections. So the brain actually cuts down the number of connections in that period, and it's ideally set up in that age to specialize.
Oh.
So the problem that we have in our education system is in a modern US education system from 11 to 18, you are the opposite of a specialist. You are required to be a generalist, generic kind of high school curriculum and all of that.
Right.
And you get these people like Warren Buffett, Bill Gates, or Michelangelo, who, by weird circumstances, start specializing at 10 or 11. I mean, I think Gates had done more than 10,000 hours of programming before he was 19 or 20. And Buffett bought his first stock at 11, and I think even you also did that.
Mhm.
And so in my case, what happened is that accidentally I had a lot of business acumen developed in that period of time, which was outside of the school curriculum, right?
Yes.
None of this is part of the school curriculum. And later, what I found is that when I became an engineer and I was working at this, telecom equipment company, I would ask my boss all the and I was a like a R&D, hardware software design engineer. I would ask my boss all these questions about the business end of the stuff we were doing. And he would just say, "That's not our concern. That's these other guys in marketing and sales and whatever else. We are just to design this product and deliver it in this time." And I found that ridiculous. I said, "Well, I want to know the big picture. I want to know,
Mhm.
what the economics are here and how much money we're going to make and all of that." And I found it like bizarre that there were like these 200 engineers working on stuff and no one had any interest in any of that. And I actually then switched after about 2.5 years. I switched to the business side. And of course,
Mhm.
knowing the engineering was a big advantage, but then I could finally start seeing the whole picture. And I found I didn't realize at the time that very few people could crack businesses or business models as quickly as I could. And it was because of that time when I was a teenager. And so if you try to spend that time in your 20s or 30s, you would probably spend 5 times the amount of time or even more and still not get to the same benefit as what you would get in your teen years.
Yeah, that's a very interesting childhood. I'm sure that it developed you in many, many ways. And so at Clemson, you studied engineering and
Yeah.
then left to go work for an IT consulting firm, but in 1991 started your own business with $30,000 from your 401k and $70,000 on credit card debt, and sold that 9 years later for $20 million, which is just incredible. Did your experience as an operator affect your investment philosophy and strategy? I'm assuming it did.
Well, at that time, when I started my business in 91, I had not yet heard of Warren Buffett. And I did not even know what investing was. What I understood when I started my business was I had all my models from my dad, and I knew how to get a business off the ground with zero money. I mean, I can still do that. So my dad used to joke and say, he says, "You can put me naked on a rock with nothing and I will start a business." And so basically I would say the frameworks and mental models I used at that time were things I and you know what is so natural to me about that is again what I found is a lot of entrepreneurs don't know how to do that. And I
Mhm.
later learned that all these things I kind of take for granted is there because I had this, front row seat at a time when my brain was just wired to absorb really fast. And my dad had
Right.
repeatedly given us these lessons. Like I remember the very first business he started was selling magic kits by mail.
Hmm.
This was like 1962 or something. And basically, it was even before I was born. But he had explained what he had done. He said, "Look, I took 250 rupees I had and I placed an ad in a magazine called the Illustrated Weekly of India. It's a really small display ad, no more than like, 4 inches by 2 inches or something, explaining that you could order these magic kits by mail and, you could learn to entertain your friends and stuff. And he said that from that ad, a bunch of inquiries came in, a bunch of people wanted to buy it. And when the dust settled, he was left with 1,400 rupees. So he put in 250. He sold a bunch of these kits, and including the cost of goods sold, including his profit was 1,400 rupees. So then I said, "Okay, I'm going to place another ad, another
Mhm.
250 rupees." And boom, he was in business, right? And he didn't have any expenses because he still had his job. He was running this from the home. My mother would like pack everything to be shipped out. And so I understood how he got all these businesses off the ground with nothing. And
Mhm.
so it's really easy to do that in the IT business. It's a capital light business. It was fine, not a problem.
Yes, and you talk about some of these business models in your book, The Dondo Investor. I should tell my listeners that Monish has published 2 books, The Dondo Investor, The Low Risk Value Method to High Returns, and Mosaic: Perspectives on Investing, and they're both wonderful books and worth reading. So, when you sold your business, how did you become acquainted with the Warren Buffett style of investing and Berkshire Hathaway?
I started the business in 91. In 94, I accidentally heard about Buffett. I was just looking for some book to read on the way back from vacation in London. I picked up one of Peter Lynch's books and I was really intrigued and I wanted to kind of explore that area. And then I read his second book and then I was out of Peter Lynch books.
Yep.
And in the second book, he was talking about this guy Buffett in kind of reverential terms. And then I started to dig into who this Warren Buffett was. And I was really lucky because the first two or three biographies on him had just come out. I read those, then I got to the Berkshire letters, and then that opened up this whole big world. And the big aha moment that went off for me when I read all that was I said, the framework that my dad and I used to start and run a business is really the same mental models you use to figure out whether an investment makes sense or not. It's really the same. The difference is that when you're doing it in terms of, you know, creating or running a business, is you have a lot of operational heavy lifting to do. Whereas in investing, you just have to do the analysis and you're done. Someone else does all the lifting. And I knew that I enjoyed this process of figuring out these offering gaps in the market. But I found that you would spend like 2 or 3% of your time figuring out the business strategy or the direction of your startup or whatever. And then 95, 97, 98% of the time is the heavy lifting to make it happen. And I enjoyed the 95, 98%, but I really, really enjoyed the 2 or 3%. So
Mhm.
what I realized when I read about Buffett is I said, wow, this converts the 2% time to 80%. And
Mhm.
you don't have to get your hands dirty. So I said, this, and my dad passed away soon after that. I never really got a chance to discuss the model with him. I wish he knew about these things because the two are very interrelated, and Buffett says I'm a better investor because I'm a businessman,
Right.
and I'm a better businessman because I'm an investor. So basically,
Absolutely.
anytime I'm looking at a business or an investment, I put myself in the shoes of the operator,
Mhm.
right? And I look at that business through the shoes of the operator, the shoes of the CEO, and say, okay, what are the two or three variables that drive the outcome here?
Mhm.
Okay. And are those two or three variables predictable? And because no CEO runs a business through a spreadsheet,
Right.
they've got the models in their head, they've got relatively simple models. I mean, they've understood exactly what their competence is, what their, competitive advantages and all of that. And they just hone in on that and keep going. And as long as you as an investor can get to the same models that the CEO is using to run the business, you have a basis to figure out where it's going to go.
Very interesting. Monish, there's so many fascinating things occurring in today's markets and that economy today that it's really hard to choose one topic to discuss today on the call. We've got asset bubbles unwinding, inflation, geopolitical chaos. Like many of our guests, you've been an active investor for decades now and have the benefit of historical perspective. Do you see an opportunity brewing for value investing, and where are you finding opportunities today?
Yeah, I mean, I think what I think is useful for investors is to ignore the noise. All this macro stuff going on is really hard to forecast and predict. I mean, if you just, go back 3 years, I mean, who would have thought we'd have a pandemic? And who would
Mhm.
have thought that Russia's going to invade Ukraine? And, all this, huge stimulus causing all this inflation. All these things were not on anyone's radar,
Mhm.
and here we are. So I think the macro stuff is really hard to predict or, have any kind of a basis for. At the same time, if you look at for example, a business like Mautai or Starbucks,
Mhm.
or Microsoft, you know, they are going to transcend all this. You
Mhm.
know, all this stuff is Mickey Mouse noise for Starbucks. You know, what matters with Starbucks is, do they still delight their customers? And those the micro aspects of what happens around the business trump whatever macro stuff is going on. So the
Right.
micro always trumps. So the important thing always, I think, is to focus on specific businesses within your competence and so on. One of the things I realized in the last few years is I started going to Turkey in Istanbul in Turkey about 4 years ago.
Mhm.
And I made a few trips. In fact, earlier this year I spent like 3 weeks in Istanbul in an Airbnb, which was really good. And I started visiting different businesses. Basically, in in Istanbul, there's a good friend of mine who's a hardcore gram oriented
Mhm.
value investor, and he had come to my annual meeting, and we became friends, and so on. So I just told him in 2018, listen, I just want to visit every company that you have an investment in,
Mhm.
because I saw that Turkey was very unstable and people were exiting and so on. I found a few amazing businesses there where the core business is great, and people have fled because of macro. So I would say probably like 97 or 98% of listed businesses in Turkey, I think, are uninvestable because it's
Mhm.
got crazy inflation and all that. But there's a sliver, 2 or 3% that transcend all that, and
Mhm.
they're extremely cheap. And so in that case, I would say some understanding of where to fish I found useful, and I think we do really well on our Turkey investments.
Yeah, it's interesting. Uncle John Templeton, was well known for coming out with these big calls, and they sounded like macro calls, but really he was just focused on areas and regions around the world where he found companies trading at depressed valuations. So is that similar to how you allocate capital? You're looking at valuations to tell you where to invest in the world?
Yeah, I don't what I did with Turkey is not the way I usually approached it.
Mhm.
Though I think that that's a good way to approach it. I never really well, I used to be a purely US investor when I started, and I was that way for a long time. And then I was starting to find that it's getting harder to find American businesses that, fit
Sure.
fit kind of competence and valuations and so on. And so I noticed, for example, in 2012, when I invested in Fiat Chrysler, it was based in Italy. It traded at a much lower valuation than Ford or GM for no good reason. There was no
Mhm.
logical. And in fact, I what I realized is it was a vastly better business than those other two businesses, a much better leader.
Mhm.
So I said, wow, this is like, I mean, just to give you a sense, at that time, Fiat Chrysler's market cap was 5 billion and their revenues were 135 billion. Okay. And so they were trading at, like, less than four times, I mean, less than 4% of revenue. Inside that 5 billion was 80% of Ferrari, which now alone is 40 billion. you
Mhm.
know oh, Ferrari was this itty bitty thing inside that. And they spun out so many things. They sold these parts businesses. I mean, anything they spun out was sold for the billions, and all of that was in that 5 billion. It was just crazy, the Jeep franchise and the Ram franchise and all of that. So yeah, so you sometimes get these weird things. And in the case of Turkey, you know, it was very extreme. Like in 2019, we made an investment in this company which is the largest warehouse operator in Turkey. 12 million square feet. They've got like about 100 warehouses, very prime areas in Istanbul and around. You could go to any real estate broker, show them that portfolio, and they would tell you in their sleep in 6 months they could liquidate the whole thing for something like $1 billion.
Right.
There's like, at the time in 2019, I think liquidation value was like 900 million or a billion. There was 200 million of debt. So you're about 700 million net. And the market cap was 20 million.
Oh my
And
goodness.
I mean, like, you were buying at 3% of liquidation value. I'm not even getting to intrinsic value, I'm getting to liquidation value. They've actually increased the value of the business in dollars since then. We own a third of that business now at
Wow.
what a ridiculous value, and it's gone up like 4 or 5 times in dollars in the last few years, but still cheap. But the thing is that I would never find anything like that here.
Sure.
It's
Right.
just weird things where the Turks, the local Turks are gamblers. I mean, the Chinese are gamblers, but they got nothing on the Turks.
Okay. I did not know that. Uh,
I met a CFO of a very large Turkish conglomerate in Istanbul, and he's telling me, he says, every country has a national game. He says, like, in Russia, the national game is chess, and the US, the national game is poker, and in China, the national game is baccarat. So
mhm.
he says, "Do you know what the national game in Turkey is?" I said, "Why don't you educate me?" He said, "The national game in Turkey is backgammon." So he said,
My
chess is purely skill,
uh-huh.
poker is skill and luck.
Uh-huh.
He says baccarat and backgammon is pure luck,
Pure luck.
nothing.
Yeah.
There's no skill, okay? And so in Turkey, you have these parlors where these men go and spend the whole afternoon playing baccarat,
Whoa.
okay?
Yeah.
And that is, when they talk about the Turkish market, they don't talk about investing in the market. They talk about playing the market. So 80% of the Turkish market is held by insiders or foreigners.
Mhm.
That doesn't trade much. The 20% that's held by locals, it turns over every 9 days.
Oh my goodness.
The entire 20% turns over every 9 days. And most Turks who invest in the local market, they want to invest at 10 o'clock and be done by 2 o'clock.
Goodness.
They
Wow.
want to buy by 10 and sell by 2 and make their 8% or whatever, and then do the same thing the next day.
Well, that is certainly not investing the Templeton way. So, John
So
Templeton often
so
talked about
there's a
holding
there's
investment
a
200 years.
there's a quote by Buffett. He says, the stock market is a mechanism to transfer wealth
Uh-huh.
from the active to the inactive.
Yeah. That's a great quote.
I don't think Warren has been to Turkey or understands Turkey, but I think it fits that. I mean, what I was shocked at is this $20 million business. I thought I wouldn't even get 50,000 of stock. Okay. Because I said this will be some illiquid nonsense that I'm never going to buy.
Right.
And there's massive volume, unbelievable volume. I was shocked at the volume.
Oh, that's very interesting. Well,
Yeah.
we're seeing lots of opportunities in international markets. I mean, international markets are very depressed compared to the US market. Are you still allocating capital to India?
Yeah, I mean, I got a little bit sidetracked because we couldn't go anywhere for a couple of years. You
Mhm.
know, I can't really invest in India or Turkey or anywhere until I meet kick the tires, meet the people, all of
Management.
that, right? So that was really kind of kaboshed with the pandemic, and now we're getting back on track. I haven't had any new investments that have come up in India. I found a couple of great businesses in Turkey earlier this year. So that is, I mean, I actually think that if I were starting out with a small amount of capital, I would put all my time and energy into Turkey
Yeah.
because
That's
just the way that market is. I mean, we have like there's a company. I don't have an investment in this company yet, but I don't know if I will. But there's a company called Dogus Automotive that imports all the VW brands into Turkey. They have a monopoly on Volkswagen and Porsche and Bentley and all the other brands that VW has.
mhm.
And the car business is useless, but the car dealership business is great, especially the parts and service. That does exceptionally well. But because they are a sole importer, nobody competes with them on the price of a new VW. You
Oh,
know, I mean, they have a very great relationship with VW. So what I'm saying is that that's kind of like one of those franchises that just does, and it's like 14% market share of VW brands in Turkey. So it's just you get these businesses and they're trading at like three times earnings type things, and it's really good.
Very, very interesting. I would love for you to spend just a minute or two talking about your philanthropic endeavors. The Dakshana Foundation, which I have been very impressed with. Kind enough to send me your annual report every year, which is really well done and produced. If you could tell everyone what the Dakshana Foundation is, what your goal is, how you became inspired to fund the Dakshana Foundation, and the important work you're doing in India.
Yeah, well, I think you might find a lot of this resonance with your grand uncle.
Mhm.
He did a great job with philanthropy, and I think the issue is that if 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 you are any good at investing, like Buffett says, you can't help but get rich. And at the end, we can't take it with us. And actually giving it to your gene pool, large inheritances to your gene pool is just going to do more harm than good.
Yeah,
Like I think Buffett said, if you're Jesse Owens' son, the sprinter, it's okay to start 100-meter dashes at the 10-meter line, but not at the 40-meter line.
right.
You're not going to become a great sprinter starting at the 40-meter line. And so if you're going to not give it to your gene pool and you're going to, give it back to society, I really was disillusioned when I started looking a few years back. I said, okay, if I had to do this today, who would I give the money to? Because I really wanted to just write a check.
Mhm.
And I really found that most charities have really great hearts, but they don't have great heads. They don't understand social return on invested capital and how to measure outcomes and all those sorts of things.
Right.
And so I was actually really forced to start Dakshana out of like necessity, because I said I really need to learn this piece and become good at it so that by the time I'm 70 or 80 and losing half my marbles, I'm not just looking to write a big check and be done, because I will probably do a worse job then than today. And so
Mhm.
Dakshana was really set up as a way to experiment and hopefully, if the wealth grew, to scale up over time. And so we we identify very gifted but really poor kids in India, and we try to get them admitted into the IITs, which is the kind of the MIT of India.
Right.
So these schools are really good, but they are almost free to attend. They're subsidized by the government, but they're very difficult to get into. And
Mhm.
it had turned into such that unless you were middle class or higher, more like upper middle class, you really couldn't afford the coaching and the prep to take the exam. And so even though the government set it up to be egalitarian across, the make it for all the people, it really became for middle class and higher. And so what we did is we basically leveled the playing field. We identify really poor kids, and then we basically bring them in for 1 or 2 years for intense prep. And it's worked really well. The IITs have like a 1.5% admit rate, and we have like a 70-80% success rate.
Unbelievable. Now, how many kids do you work with every year?
We typically take about 1,000 kids a year, and about 800 of them get to the promised land. And even the rest of them, they get to second tier colleges, which are also pretty good.
Do you have a particularly inspiring story to share with us about one of your students that you've helped along the way?
Well, no, every year I visit the homes of the scholars. So we have many, many stories, but we like there's one kid who's now in Mountain View with Google. And when he was growing up, his dad is a tailor, but he's a tailor kind of in a slum of Hyderabad.
Mhm.
And he's kind of like an entrepreneur. So, just depends on whether he got any tailoring jobs that day or not. So sometimes they would go to bed, all they would have is some boiled rice. And sometimes when they go to bed, they couldn't even have boiled rice. Like they'd go to bed hungry.
Right.
Sometimes he got sent back from school because they couldn't pay the school fees, which was 20 rupees. 20 rupees is 25 cents.
Mhm.
The monthly school fee of 25 cents, even that his parents couldn't pay.
And this
And
is a private school, or is this the school through your foundation?
no, these this is like a government or a
Oh,
private
right.
school, like
Yeah.
a but private is also very low end. It's private school.
Yes, but private
Not
schools are
well.
very common in India. Even,
Yeah.
very poor children attend private schools in India.
Yeah. And so he cleared our test, and then we took him on. And the IITs, they have about 1.3 million kids who apply to get in for like 15,000 seats. There's a very tough entrance exam, and you get ranked, like rank one, two,
Mhm,
three, and so on. He was ranked 63. So it's 63 out of 1.3 million. And then he went to IIT Bombay Computer Science. And then when he was going to graduate, I I told him, listen, just send your resume to Google by email,
mhm.
and just make sure you just put your IIT rank. Forget everything else. Just put your IIT JEE rank.
That's
Because
it.
whoever that Google is reading it is probably IIT grad anyway.
Yeah,
And they
that's
interviewed him
true.
over Skype, and then they brought him over to the States. And the thing is that, so his family used to be at, like, in a good month, like $70 a month, $2 a day type of thing.
Yeah.
I mean, I think he's risen so much now. He's like level 6.
Oh
I
my
think he
goodness.
must be like north of 3 or 400,000 a year.
Wow, what a
It's like
success.
it's not even like, even he cannot. He says like the first paycheck he got exceeded the sum total of all paychecks or savings of his family for like decades.
Monish, that's really a wonderful story, and, I think it's such a great thing that you're contributing back through the Dakshana Foundation. And if my listeners want to learn more about Dakshana, about your books, about your investment funds, what is the best way they can contact you? What is the best way they can learn more?
The best way is to go to God Google. God Google will tell you everything.
Okay.
You know,
Well,
the ultimate God.
there you go. You heard it from the horse's mouth. Go to Google and it will direct you to Monish. Monish, you've been very kind to my husband and I over the years. You're always so friendly, include us in so many things, and I can't tell you how much we appreciate it. It has been a pleasure having you on today. It has been a pleasure getting to know you and your beautiful daughter. I haven't met the other one, but I'm sure she is beautiful as well. Thank you so much, and I look forward to seeing you maybe in Omaha next year.
Yeah, and I think for me, Lauren, the thing is that I learned so much from Sir John, and it was very special to have your friendship. And you obviously had a great connection with your dad, who's a very good investor, but also with your great uncle. And I think just to be able to, you know, interact with someone who knew him so well, it's just wonderful.
Oh, thank you. I really miss him a lot, but feel like I'm helping keep his legacy alive through my work as chairing the John Templeton Foundation. So I'm deeply involved in his philanthropic efforts and just trying to keep a good thing going. So thank you so much for those kind words and for joining me today.
All right, that sounds great. Thanks. Thanks.
Okay.